You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 23rd of May, 2016. Thank you so much for being with us. And to start the program, we want to thank you for all the wonderful comments you've given us. We are now new and notable as far as our weekly video podcast. We only started putting the weekly up at iTunes maybe 3 weeks ago. And boom, there we are now. Of course, we have been doing our podcast for many, many months now, well over a year and a half or so. And we've been on iTunes as far as an audio podcast goes, but we broke away. We still record audio-wise the weekly forecast and review that we're doing right now, but we also put the video up on iTunes, and that's the one that's just gotten that new and notable. I will tell you that our daily review that we do, the audio, is, I believe, number 7 in the world in business podcasts. So we're very, well, in stock market podcasts, we're very, very happy with that. So thank you all for your support. If you do appreciate what we do, we ask one favor and one favor only, and that's go to iTunes, give us a 5-star rating, both for the weekly video podcast and for the daily podcast, and subscribe to them. Thank you so much. So let's jump right into what's going on in the market. What do we see happening? Well, we had 10 weeks at the beginning of the year after the huge plunge in the market starting on the 19th of February. We had 10 weeks of strong up movement in the market. That all came to an end. The last strong up week was the 22nd of April, and starting on the 29th, and again, these are all week ending, the 29th of April, then the 6th of May, then the 13th of May, and of course, the 20th of May. All have been red down candles. The first week was an open box red candle, meaning indecision, followed by down candles. We don't have a crossover yet going down on the total market chart, which is what IYY represents, but we do see the derivative oscillator losing its energy, and we see the signal line and the MACD coming together. Remember, when they cross, we have confirmed either up moves, as happened back on the week ending on the 4th of March, and if and when this, well, at some point the market will cross over and go down. When that happens, it'll be a confirmed down move, as it was back on the week ending the 8th of January. Remember how the market opened at the beginning of the year? It just took off, slamming down, and then ended up bottoming out around the 12th of February, and that was that 10-week up drive. So where are we on the weekly charts? We are going down on the big charts. Now, if we look into the 2-day chart, remember we do the weekly and then we do, I'm going back to what I do on a daily basis. The daily chart, we always like to track what happened over the course of the week. Monday was an up day according to our Heikin Ashi candlesticks. If you haven't listened to the recent Heikin Ashi training that we did, go to the website, chartingwealth.com. It's posted up there. Very proud of it. Did a nice keynote presentation in about 7 or 8 minutes. All you need to know about Heikin Ashi candlesticks, our favorite kind of candlestick. Heikin Ashi is, of course, a Japanese candlestick pattern, but it's different than the typical high-low open close. It is calculated differently. We love it. Learn all about it. Heikin Ashi means average pace in Japanese. So check it out. Monday was a green up candle. Tuesday, a red down candle. Wednesday and Thursday. Friday was a stronger open candle, actually an open green box candle with a long wick that touched our 2-day trend line. Again, closed below it, but big up moves, well, big, 0.75% for the day on Friday. So what does that mean? Well, we still have the derivative oscillator in the negative. There is no crossover on the daily chart, and like we told you, the weekly chart is still running down. Okay, let's go from that to the S&P 500 as represented by SPY. Looks very similar. 4 weeks of downtrend. Actually, yeah, it was an open box also. That's what you call a spinning top. We had a spinning top on the 29th of April. That's after strong up movement for the week ending the 22nd of April. That spinning top typically means, well, it does mean that you've got indecision. Then the market started moving over and down. Now, we will note that each of the weeks did have some up movement. It had an upper wick, so they weren't huge, big, strong down candles like we saw starting back at the beginning of the year. The first week of the year ending the 8th of January, huge down candle, no up movement on those first three candles, first weekly candles of the year, the first three. We just saw strong down movement and big wicks on the bottom. So that's where we are on the S&P 500. Looks very similar to the total market. We go, whoops, I'm going back to the 2-day chart again. Go to the daily chart. What do we see? We see on the 16th, again, some up movement, a green closed box candle, followed by red down candles until Friday, and some up movement in the market, again, not above the 2-day trend line. Technically, the S&P 500 up 0.63% on Friday. It was a down week, though. All right, for our last index, before we go to gold, we're going to look at my favorite chart, which is always QQQ. For some reason, I'm partial to it. I love trading the Qs. Again, Nasdaq 100 is what it represents. It crossed over on the weekly chart as far as, well, it's not crossed over yet on the MACD. It did cross over on the derivative oscillator. And again, we've got up candles. We've got up candles for the last 2 weeks on the Nasdaq, but a crossover going down on the derivative oscillator, and we have the MACD and the signal line getting very, very close together. So that is where we stand there. And again, when we talk about the up movement, it's not gone up anywhere near what it went down just the week ending the 6th of March. So we'll continue to pay attention, see what goes on with the Qs. On Friday, it was up 1.10%. Now let's look at the Qs as far as the daily chart goes. What do we see there? Well, the market opened up on Monday, strong up movement. Then a lot of indecision on Tuesday with a spinning top, almost a doji, D-O-J-I, if you want to look up and read what that is. And then down movement on Wednesday and Thursday, and then that strong up movement on Friday. To note, that up movement did not get as high as the market was on Monday. So again, not a huge recovery, but it did cross over. I mean, the Nasdaq 100 has been sliding sideways here for many days. Not a lot of positive movement, but did cross over going up on the daily chart on the 20th on Friday. So that is where we are as far as the Nasdaq 100 goes. So again, looks like it's getting close to crossing over, going down, but hasn't happened yet. And as far as the S&P 500, hasn't crossed over yet. Big down candles, though, for at least the last 3 weeks. Red candles for 4 weeks. Same with the total market. Now, lastly, on our weekly charts, we're going to take a look at gold. What is gold doing? Well, doji on the week ending the 13th means lots of indecision in the marketplace. Opened and closed at about the same point. The bulls and the bears had about the same amount of power. That's what that doji means. I encourage you to read more about it. Then we had a spinning top the following week, means more indecision. We do see the MACD and the signal line getting much closer together, could cross over going down over the next week. Derivative oscillators also lost a lot of its speed. So just continue to watch. Gold has been in an uptrend since the first week of the year. When the market crashed, gold started to soar and actually hit its high back on the 11th of March. So continue to pay attention to what's going on in gold. It may be peaking out. I say maybe because we don't have a crossover going down yet. When that occurs, we shall see what we shall see. Let's talk about what gold did during the week. The daily chart shows us that on Monday the 16th, gold was up, and then indecision on Tuesday, strong down movements Wednesday and Thursday, and not really much of a recovery at all on Friday. In fact, again, our Heikin Ashi candlesticks are showing us the average pace it shows us actually that that down movement had significantly slowed as far as where gold opened. And that's the beautiful thing about the average pace candlesticks that we use, is it gives you a much better feel for the pace of movement, showing you actually a green up candle. Gold was technically down 0.13%. So 0.13%, it was down, although our candle shows some up movement because it's showing us the average pace. That's what makes the Hikinashi candlestick so cool. In a confirmed down move has been on the daily chart since the 10th of May. So that is where we are as far as our charts go. Now, for those of you who are interested in learning how to read charts for your long-term investing, okay, this is one of the big reasons, not only to give the folks that follow us on a daily basis an understanding of what the overall market is doing on a big chart. Also, I would encourage you to pay close attention to something that you might look at once you learn how to do this well, buying later, making your own decisions, but you can start practicing now. SPY, the S&P 500, you can track that when it moves up, such as when we had a crossover going up back on the 4th of March. You could have jumped in somewhere between the low of 191.54 and the high of 201.35 and tracked a nice up movement until you started having the red down candles at about 106. You could have cleared anywhere, again on your practice trade, from a low of 191 up to somewhere around $205, $209. Again, not bad to make per share on that as it moved up. How difficult is it to jump into a move, put yourself a nice trend line in, follow that trend line up, pay attention to your candles and your derivative oscillator, and then get out once the getting's gone, if you like some southern terminology. But once you see your derivative oscillator start losing energy, you could pull out. Once you start seeing your trend line broken, once you start seeing red candles, why not ride these moves up? And then when the market starts going down, what do you do? Here's what's so beautiful. There is something called an inverse fund of the S&P 500. It's called SH. It's the ProShares short S&P 500. Look what it does when the S&P 500 is going down. It goes up. Isn't it amazing? When the market starts to move down, as it did in January, look at what happened to SH, the ProShares short S&P. It went up. So you have the opportunities to capitalize, if you're a more sophisticated investor, on these wonderful exchange traded funds that allow you to jump in on shorts when the market's going down, and you can stay in the S&P 500 as represented by SPY when the market's going up. Isn't it beautiful? So the reason you need to follow us every week on what we review is so you get a good feel for what's actually going on the weekly chart. And for those of you who don't have a lot of time to spend in the market, just pay attention to the weekly chart. Wait for the weekly chart to cross over going up. You can purchase it then once that candle closes, or which means you'd look to get in the next week, or you can wait for a rollback on the 2-day chart, that is a move in the opposite direction. So if you saw a crossover happen as it did back on the 4th of March, you would follow the 2-day chart, wait for a rollback in the opposite direction, and then when it moved back in the same direction as the big chart, you would jump in, like we do on the daily charts where we're using the 2-day and the 4-hour. You want to know more about what we're talking about? Go to Charting Wealth's website, sign up for our newsletter. We'll send you a link to our How to Read a Stock Chart video where we talk more about that. And I'm just finishing a book. I think I'm going to start actually publishing the chapters for all of you to read and comment on and help me edit it. I just thought, why wouldn't I get my friends who listen to us every day to help us with that. They can learn, and we can get some wonderful editing and ideas from you. So I think we're going to do that. I've been dictating what I've been writing every day, and we're going to start pumping that out to you soon. Now, lastly, let me move on here and talk about, this is the last thing that we do. Once we go through these weekly charts with you, we then turn around and we go through what moved the market during the week, because it's the only time we ever talk about news. We don't really pay attention to news that much during the week. We don't get ourselves confused with the talking heads who may or may not be paying attention at all to what the charts are telling us. The news media is there to sell you commercials. We are here to follow the charts, and the charts tell us what's going on. But let's talk a little bit about the real news that came out in the market this last week. First, the Fed ended up signaling that a summer rate hike may be happening. The minutes from the April Federal Open Market Committee meeting made it clear that the Federal Reserve might be raising its interest rates in June or July at that meeting if the conditions allow. Now, you remember just 2 weeks ago when we were talking about how bad the economy was, how everything was just in the tank? Well, now the Fed's saying inflation's under control. We've got the economy's doing great, and maybe what we need to do is to turn around and raise interest rates. I tell you, it's interesting when you have the Federal Reserve and the bankers in charge, isn't it? Our job is to read the charts and make money whether the market's going up or down. Let's also talk about the Q2. This is something that second quarter, they're telling us now that April unemployment report was weaker. The April U.S. employment report was weaker than forecasted 2 weeks ago. But there's other upticks allegedly in economic activity and inflation. We're being told that industrial output, yes, we actually aren't just totally a service economy yet. Industrial output was up 0.7%, and that was led by what? Strong manufacturing? No, utilities output. Okay. Consumer price index rose 0.4%. That's the strongest monthly reading in 2 years. Housing starts rose at a stronger than expected rate. That was somewhere just over 6.5%. And building permits also were up close to 4%. Now again, that's from the previous month. Isn't it amazing that our economy seems to be based on what utilities and building houses that people may or may not need? But again, we listen, we pay attention, we watch the charts, and we do what works. Okay, let's talk about some other things. The Greeks are trying to figure out their debt relief plan. That's apparently been floated in Europe. We'll see how that, can you believe that's still out there, still being talked about as all the refugees pour onto the Greek islands? Just who knows? Puerto Rico, of course, they're broke and underwater and bankrupt, and the U.S. Treasury and the Republicans in the House are trying to work something out, say they've reached a tentative deal. The Saudis, our good friends, the Saudis, well, what's going on? They have actually had their credit rating slashed. Going to be interesting to see how the years and how the future plays out for the Saudi royalty. We'll just have to, again, watch, wait, trade, make money, no matter how the market goes. China, well, they have underwhelming data coming in from China. The ECB, it is having trouble. Its bond buying program is beginning to run up against purchase caps. Now, basically, the way that the ECB works is they have this self-imposed limit of 1/3 of a country's outstanding debt. That's their own self-imposed limit. Well, they've got about a year to go in the program, and they've almost reached the limits because of the purchases of the Irish and Portuguese governments during the debt crisis earlier in the decade. Interesting. Everything seems to be run by debt. Well, what's interesting, the Philippines has dislodged China as Asia's fastest growing economy. Find that interesting. Now, that's what moved the market in the last week. What is going to be happening over the next week? Things you need to pay attention to. Well, On Monday, there's going to be a flash purchasing managers indices. They're going to be released globally. What kind of impact will they have? Well, if there's something really big in them, it might have some impact, but I'm not holding my breath. Japan's going to release its trade data on Monday. You're also going to see over the course of the weekend, by the time a lot of you hear this broadcast, the G7 finance ministers and central bankers are going to end up concluding their meeting of the G7 finance. That'll be interesting to hear, but I don't know how much that'll be moving the market over the next week. On Wednesday, Q1 gross domestic product for the UK, the United Kingdom, is going to be coming out, and Germany is going to release its IFO business climate survey. So that's going to be coming out on Wednesday. Again, none of this I don't see. It's not like Federal Open Market Committee stuff. Yes, they can have an impact, but are they going to have a huge market moving impact unless the news is really good or really bad? And then finally on Friday, you're going to see the revised Q1 US GDP. That at the end of the week, depending if it's super good news or super bad news, that could have an impact and drive things. So do pay attention right there toward the end of the week. Well, folks, that's where we are as we end this past week on the 20th of May, as we go into the new week on Monday the 23rd. We appreciate you being with us. You got questions, problems, concerns, we're here to help. We love to hear from you. Please don't hesitate to follow us on Facebook, Twitter, Instagram, YouTube. If you do appreciate what we do, go to iTunes. Subscribe to both our video podcast, the weekly, and also the daily audio podcast. And give us 5 stars and say something nice about us. It really helps with our metrics. Thank you so much. We appreciate being with you. Like we said, let us hear from you. Sign up for the newsletter at our website, chartingwealth.com. Hope the week treats you well. God